Hello, Business 330 students. This is Professor Hassey. We begin week 2 of our Business 330 summer online session, the week of June 12th through 18th. Today's date is Tuesday, June 13th. This week, some of you still have to clean up your portfolios. Please look at my notes back to you in the discussion forum. And update your spreadsheet. Some of you need to convert from PDF to a spreadsheet file folder. Others need to update your market indexes, the Dow Industrial Index, the S&P 500, and the NASDAQ. Need to update those values as of Friday, June 9th. A couple things that happen. If you go to the stock market at 1:30 in the afternoon, after it just closes in New York, you'll probably get the wrong price of your stock or of your market index, because it takes about an hour to an hour and a half after the close for all the final transactions to be completed and adopted and posted to Yahoo Finance, let's say. So you need to give a couple of hours after the closing of the market to get the proper closing prices of the market indicators and of your stock. So just a word to the wise, it takes a while for it to be cleaned out and to finalize. Remember, the markets do over hundreds of millions of transactions every day. So when they shut down at 1:30, 1 o'clock in the afternoon Pacific time, they still need to go through and clean up the final transactions at the final seconds of the market open. So that takes a while to do. And so if you wait an hour or so after the close, then you'll probably get the correct statement numbers. That's a word to the wise. Also this week, we are beginning our student professor interviews. We had some yesterday on Monday, and now we have some more this Tuesday and Thursday. If you have yet to sign up for those, please do so. But I think everybody in our class but one has yet to sign up. So please do that. Remember, this is a graded work to come online and just spend a few minutes with me just to get to know each other and to ask any questions or concerns you may have about the course. You also have an assignment this week. The assignment is due on Sunday, June 18th. So the next 2 weeks, you'll have 2 assignments. And some of the material we talked about last week for assignment 1. Some of the material we talked about this week, or you can go in and look at it in your Blackboard or in your PowerPoints. It's on chapters 1, 2, 3, and 4 this week, chapters 4 and 5 next week, assignment 2. And I'll walk you through that assignment in just a moment. So we're beginning to pick up the pace a little bit in our Business 330 class. Remember, if you have any questions or concerns, please let me know. And also, as I indicated in our student professor interviews, as you have them, every assignment except the last day of class has an extension. So if you get to this weekend and you're still not satisfied with your work on assignment 1, you can request an extension to be posted after Sunday if you need to do so. All you need to do is just send me an email letting me know about that, and I'll respond saying extension granted. But you need to do that because Blackboard is set up to block out anything after midnight on Sunday. So if you try to post your work after midnight on Sunday, and without me extending that, you will be locked out and wouldn't be able to post your work. So just make sure it will not affect your grade, but just make sure you let me know you'd like a couple extra days to do the work, and that is no problem for our class. Okay, you should be getting fairly familiar with our Blackboard setup. Again, this week now we have assignments and examination file folder, and there is the assignment number 1 work. It is both in a PDF and a Word doc format, whatever is your pleasure to do. In this particular one, all you need to do is download the file and do your work on the file, or if you'd like to create a separate file, even do your work in an Excel file document, that is no problem. Just when you're done completing the work, you just click on the heading of this file folder, and it'll bring you to an upload page. And all you do is you would like to update your work. You go to the upload your files. You can go back to your computer and browse and find the file folder and click on it, hit open, and then hit submit, and your files are uploaded for me to review. And then once I grade them, I throw them back to your grade center with my notes on their grading. So that's how we do our upload our work. If you have any questions on that, please let me know. Here is our assignment number 1 file folder. Again, it's due Sunday, June 18th, but extensions are available to all students. So you download this and answer the questions from, and I indicate the chapters that they're from, in case you need to look up any information in the textbook. Some multiple choice. This is the toughest question of the bunch. Question 7, I give you financial data and you are to tell me 3 things. What is the earnings before interest and taxes? What is the company's net income? And what is the cash flow from operations of this firm? This follows the discussions and reading of chapter 3. Be talking about that in my videos today and also in my update videos on Friday. But it's asking you, the finance student, to comprehend accounting information and tell me something about these financial questions. Then I want you to go and tell in question 10, take one of the companies in your portfolio, just one, and find me the earnings per share for the last 3 fiscal years of your company. So I assume for most of you, it'll be December 31st, 22, 21, and 20. Find the earnings per share for your company. Now, there's a variety of ways of doing that. You can use the D&B Hoover's database at the Wilson Library. You can use Google and Yahoo Finance. You can go to the company's website. And also you can just go to Google and type in earnings per share for your company, and it probably will give you a history of that. So you don't need to calculate this. Probably the easiest way is just to find that information, the last 3 fiscal years for the earnings per share, and then briefly comment how these numbers have changed. Give me an explanation. One company from your portfolio, 3 years earnings per share. So that's our assignment. A little bit of research, a little bit of definitions, a little bit of calculations to get off on a right footing for our finance class this summer.
We are going to discuss 3 common financial statements: the income statement, the balance sheet, and the cash flow statement. Are you familiar with these documents and why they matter to you? If you own your own business or even run a division of a business, it is imperative that you understand these statements because they tell you about the general financial health of the company. Also, if you have ever invested or considered investing in a company, whether through the purchase of stock or through a loan, you'll want to understand the company's financial health. In this program, we will explain each of these 3 statements and what their purpose is, how to read them, and how they can be applied in a real-world setting. So why is it important to understand all 3 financial statements? Basically, each one tells only part of the story. They are somewhat like pieces of a puzzle, and you need all 3 pieces to see the big picture. Let's begin by reviewing the general purpose of each financial statement and what distinguishes one statement from another. Simply put, the income statement tells you whether or not the company is profitable during a given period, usually monthly, quarterly, or annually. It may be helpful to think of an income statement in terms of a video camera. At the start of a period being measured, you hit the record button, and the camera starts recording everything that takes place until you press stop. Similarly, an income statement indicates how a company is performing over an extended period of time. Knowing whether your company was profitable over a period of time does not necessarily tell you how much money the company has right now. That's what the balance sheet is for. In contrast to the income statement that records transactions in time like a video camera, the balance sheet is like a still camera, showing the company's financial state at a given moment. It provides a snapshot in time that can be used to determine how much the company currently has, how much it owes, and what is left for the owners. The cash flow statement is based on numbers from your income statement and balance sheet, and is like looking at your own checking account. It shows you what the company did to generate cash and how it used cash during a given period of time, often monthly, quarterly, or annually, like the income statement. Thus it answers two questions. Where is my cash coming from, and where is my cash going? Remember, while each statement has a different purpose, all three are necessary in helping us understand a company's complete financial story. For example, if you want to know whether or not a company is profitable, the income statement is what you need. Even though you know the company is profitable, if you want to know how much money the company has available right now that you can spend, you want to look at the balance sheet. And regardless of profitability and current available cash, if you want to know where cash came from and where it went, you look at the cash flow statement. Each document fills in a piece of the puzzle to complete your understanding.
In our week 2 Blackboard in-class review file folder, there is this spreadsheet. It's for the Reggie Dunlop Incorporated. It's a spreadsheet file of their financial statements for the years ending December 31st, 2020 and 21. And this highlights all the information of Chapter 3 and Chapter 4. You might want to study this. I'm going to go over it in a little bit more detail in my Friday update video, but you can get a head start on it. Remember, the financials in finance provide a historical review of the company. Are they maximizing value? Are they making money? Do they have much debt? How's their cash flow? Also, it provides data for future planning and financial management. We take this information of what happened and apply it into the future. And there's 3 financial statements. The balance sheet, which is a statement of assets, what we own, and how did we fund them? Debt, liabilities, and equity. Equity being made up of the value of common stock that has been booked and issued by the company to their investors, and retained earnings. Retained earnings is the accumulative profits less the dividends paid out to shareholders over the life of the company. That's equity. The income statement, which is for a period of time, in this case, 1 year. Sales, expenses, earnings before interest and taxes, less the interest rate on debt, earnings before taxes. The tax rate, taxes you pay, less the net income of the company. As you can see, this company, Reggie Dunlop Incorporated, lost $95,000 in 2020. Then they made $253,584 in 2021. I bet they're happy about that. Also given is the amount of shares of common stock outstanding of this company. In 2020, they had 100,000 shares of stock outstanding, in other words, owned by the public. And as you can see at the end of 2021, they've issued now 250,000 shares of stock. So it looks like in 2021, this company got some capital by issuing 150,000 more shares of stock. And you can see that in the common stock line of the balance sheet. It went from $460,000 to $1,680,000. That's a delta, a change of $1,220,000. So they increased their equity position in 2021 by issuing to the market 150,000 shares of stock and got cash $1,220,000. We'll see that in the cash flow statement. So the net income is also a way of determining dividends. As you can see here, the company paid dividends to their shareholders in 2021 of 22 cents a share. If I take 22 cents a share times the number of shares of stock, I get $55,000. So they paid out of that $253,584, $55,000 to the shareholders of record at the end of 2021. I'm sure they like that. Thus, the net difference between profit, $253,584, and dividends paid out of $55,000 is $198,584. And as you can see, that's the overall change in the retained earnings balance for 2021. If any of you remember your accounting days when you had to do the closing entries to close the books for a period, an accounting cycle or an accounting period, all the revenue, expense, and dividends were all closed to the retained earnings account. It accumulates over the life of the company. So at the end of 2021, this company had $296,216 in accumulated retained earnings since day one of this business. Balance sheet, income statement. That all leads into the cash flow statement. The cash flow statement is broken into three sections: cash flow from operations, cash flow from financing, cash flow from investing. Cash coming in, cash going out. Cash coming in, cash going out. Cash going out. The net effect of these three areas of the cash flow statement should equal the delta in the cash position of the company on the balance sheet. Notice the net of this is $6,718. If I go to the balance sheet, and golly, the cash and cash equivalents line on the balance sheet have increased from 2020 to 2021, $6,718. The cash flow statement tells us where the money came in and where did it go out for the company. As far as a financial manager or a corporate financial representative, CFO, the cash flow statement is the most important statement. It tells us where money is coming in, net income, depreciation, accounts payable, accruals. Where is money going out? Accounts receivable, inventory. Wait a minute, Mr. Hassey. Accounts receivable is collection of money. How can that be a negative cash flow? Well, if you look at the balance sheet, the accounts receivable went from $632,160 to $878,000. That's a delta of $245,840. Just so happens that amount is on the cash flow statement. What does that mean? Well, if the receivables went up, that means we sold our products and services and have yet collect the money, collect the cash. Negative cash flow. Same thing with inventory. Inventory was at $1.3 million in 2020. It's at $1.7 million in 2021. And delta of $429,000. Inventory went up $429,000. Now, how did that inventory go up? We either produced it, manufactured it, or purchased it from a vendor, and we have yet to sell it. It's sitting on our shelves or in our warehouse. So we've expended the cash for inventory and have yet to sell it. Thus the delta and thus the negative cash flow. That's how that works. Same thing for accounts payable and accruals. We borrowed more money. We owe more money in accounts payable. We owe more money in accruals. That means cash that we didn't have to pay out yet. We will probably within the next 30 days, but on December 31st, we still owe the money, but we've been offered services for that money that we haven't paid yet. Positive cash flow. In financing, notes payable, bonds. When we borrow money, if our borrowing position goes down, if our debt position goes down, that means we paid off the debt. Negative cash flow. If our stock position increases, like we just talked about, if we issue more stock and receive the cash, that's cash coming in. Positive cash flow. And if we pay out a dividend of $55,000 to our investor, that's financing going out to our investors, negative cash flow. So we're paying off debt here and we're receiving additional capital or cash from the issuance of more stock. Financial cash flow. And Then we have the investing section where we invest in assets or sell off assets. Well, this particular period of time, we invested in assets. Short-term investments went up $51,632. Fixed assets went up $17,050. That means we purchased additional physical fixed assets and investments. That's cash going out. The net effect of all this, $6,718. Cash flow from operations, short-term working capital management, cash flow from financing, paying off existing debt, borrowing money, issuing stock, paying dividends. Cash flow from investing in long-term assets that will pay off to the company over time by additional revenue in either investment income or cash flow from new assets creating new products and new services. The cash flow statement, huge. And the final tab is statement analysis. These 6 you need to be familiar with: current ratio, debt ratio, profit margin on sales, return on total assets, price earnings ratio, and earnings per share. Those are very important. You need to know those from chapter 4. And here's that key page. This is in your review notes in week 2 file folder. Here are the key indicators taken out of page 105, or page 120, of the textbook. But here's some of those definitions and the formulas to get that information. This is a good study guide for the assignment and for those definitions, and you can practice them in this spreadsheet that I'm showing you here. I will go over this particular part of the spreadsheet, financial statement analysis, in my Friday video of this week, but you have it. You can see the calculations taken from the Reggie Dunlop financials, and I blocked out 2021 because that's going to be the subject of my discussions on Friday. But you can unblock those very easily by just going up here and wiping them out this way. But you guys know how to do that. Okay, so that's the review video. The review spreadsheet for our work for chapter 3 and 4 gives us definitions of the 3 key financial statements and what they represent. The key to financial management and business finance is to understand where are we now with the company. We can't make any decisions unless we know what's going on in the company. If we're going to invest in the company, if we're going to work for the company, if we're going to be doing business with the company, where do they stand financially? So I want you to pick one company from your portfolio in your assignment 1 and find out some information about that company as part of the assessment. Okay, so we're off and running in week number 2 of business finance. Look forward to speaking with you all in your, if you've not already done so, in your professor meet with me this week on Tuesday and Thursday. You have assignment 1 to begin with, work with, and we'll pick up our financial analysis discussion in our Friday update video. Have a great week, everybody. Talk to you soon.